Welcome back to the Midday Bell. I'm your host, Rebecca Kerswell, and today I'm joined by Dan Sutton, the CEO of Syntholene Energy, which recently went public on the TSX Venture Exchange under the ticker ESAF, and also trades in Germany under the symbol 3DD0. In this conversation, we break down e-fuels, what they are, why they're becoming essential for hard-to-electrify sectors like aviation, and how policy mandates and supply constraints are shaping this market. Dan also walks us through Syntholene Energy's approach to lowering production costs and what milestones investors should be watching over the next few years. Before we get started, a quick reminder: the Midday Bell and its hosts do not provide investment advice. All views expressed are for informational purposes only. Let's get into it. Dan, it's so great to have you today. I'm so excited to catch up on Syntholene that just went public, I guess, basically a month ago on the TSXV, and a lot's been happening. I was excited to sit down with you and catch up.
So excited as well, Rebecca. Thanks so much for your time today.
So I know for viewers that are just kind of learning about what e-fuels are, can you start by explaining what e-fuels are and how why they're becoming such a critical solution to for hard to electrify sectors like aviation?
It's so interesting. And really, I only came across this in sort of 2016, 2017 because of some friends of mine that had been working in the sector. E-fuels are really interesting. They combine component parts of hydrogen and carbon to make hydrocarbon fuels essentially from the ground up. Instead of refining down from fossil inputs or crude inputs from ethanol-based biofuels, we make designer molecules, and that allows us to achieve enhanced energy densities. These fuels are really high performance. When you use biogenic carbon sources, they can in fact be carbon neutral, and they're also drop-in substitutable. These are the same hydrocarbon fuels we're using in diesel or gasoline, or in our case, Jet A1 kerosene supply chains. And they are essential if we want to envision a supply chain for these energy intensive, high energy density systems that require currently fossil hydrocarbons. If we want to move beyond fossil hydrocarbons towards a way more abundant and renewable set of hydrocarbon fuels, e-fuels are going to be an essential component for things like aviation, marine shipping, and other fuel uses.
So yeah, this is obviously a very specific and niche product and company that you have. So I'm just curious from the market size perspective. I did see a recent industry report that projected that global e-fuel market was growing from under $9 billion in 2024 last year to over $215 billion by 2023. So a nearly 49% CAGR. So what is driving that growth at that scale, and why is aviation such a major contributor?
It's incredible the amount of appetite that we've seen to enhance producers like myself's capability to meet these new production targets and aspirations for substitution away from fossil fuels. Now, part of this is policy driven. We've got mandates in the European Union, in the UK, in a diversity of regions in Asia that are saying aviation specifically and marine shipping increasingly, they have these huge emissions profiles that we need to start to abate. We need to start to reduce the emissions associated with these systems. Now, when it comes to aviation and marine shipping, these are very difficult systems to electrify. And so governments, I think, have realized that encouraging production of biofuels and increasingly synthetic fuels are really our only opportunity to reduce the emissions profile associated with these essentially exclusively fossil-driven systems today. So we've got mandated consumption in the European Union. Any airline that lands at any European Economic Zone airport has to consume a subset of sustainable aviation fuel. And by 2030, a subset of that sustainable aviation fuel has to be synthetic sustainable aviation fuel. We also have subsidies. The European Union has struggled with really high costs associated with these fuels, one of the key issues that Syntholene seeks to address. And so they've introduced up to €6 per liter of fuel subsidy that can encourage airlines to purchase this fuel without impacting their bottom line so severely. But because aviation is responsible for probably 2 to 5% of total global emissions, it's been identified by these governments as a critical place to reduce emissions for. And that's why we're seeing this policy driven demand both on the demand side in the mandate form and on the supply side in the subsidy form.
So the aviation sector is obviously incredibly attractive. How does it compare to like marine or ground transportation as a potential end market for Syntholene?
The aviation fuel sector is about 400 billion right now, and it's growing quite rapidly. Aviation demand for airline tickets and taking a flight is actually projected to triple between now and 2050. And it's really because so many people in the world have never flown on an airplane and they really want to. In the marine shipping context, we're talking about another sort of $300 to $400 billion worth of fuel demand right now, and that continues to expand as well. But consumer gasoline is about 2.2 trillion. We're really excited for the continued proliferation of electric cars across those supply chains, but most of the cars in the world still do run on gasoline. We really like aviation fuel because today it is the highest margin. ESAF prices today are about $7.16 per liter. So that's over 10 times the price of fossil-based Jet A1. So in the supplying of that market, especially from a low cost producer perspective, such as Syntholene, we can capture the most compelling margins for ourselves and our shareholders today, but with a lot of upside to be able to continue to produce different kinds of fuels, whether they be e-diesel for shipping or e-gasoline, as we continue to expand.
So as the current like market stands, what is the gap between the airline fuel demand and the actual supply?
So, SAF demand generally, which includes both biofuels and synthetic fuels, was probably undersupplied this year by about 40%. There are lots of producers scrambling to enhance their biofuel production capacities, but because of the inherent limitations of those fuels, they'll continue to be constrained by really expensive and volatile feedstocks. There's actually an ESAF sub-mandate that kicks in 2030, and current projections assume that that sub-mandate is probably going to be undersupplied by about 40%, even in the most optimistic circumstances. Now, where it gets really interesting is by 2035 and 2040, those ESAF sub-mandates step up quite substantially from 1.2% of total aviation fuel consumption in 2030 to 2% and then 5%. If we don't see low cost production of synthetic fuels, such as that which Syntholene wants to bring to market, rush in to meet those gaps, that undersupply could move from about 2 billion or 3 billion in 2030 to closer to 20 billion by 2040. So we really need technologies like ours to move in to meet these supply mandates, to meet these demand obligations. And I think that there's a lot of industrial scale investors that are waiting on the sidelines to deploy infrastructure costs for projects like Syntholene, but they really need to see a substantial reduction in the factory gate production cost, how much these companies can actually produce the fuel for. Because right now it's sort of untenable to make industrial investments in large scale production projects that still only put out cost bases of sort of $6 to $8 a liter.
So there's obviously a massive gap in the industry. So how does Syntholene fit into that? And are there any competitive advantages against some of the other major players in your sector?
Well, how do you eat an elephant? One bite at a time. And it is true that Syntholene is relatively early stage. Our advantage is that we're borrowing from an Idaho National Labs prototype synthetic fuel production system built on the back of a hydrogen, our core constituent feedstock production system, that demonstrated in 2022 the use of hybrid electrical and thermal energy to operate a high efficiency system and reduce the cost of these synthetic fuels potentially 70%. This has been demonstrated practically. The findings have been published and are in the public domain. And our goal in 2026 is to take that lab scale prototype and replicate it in a larger format adjacent to a real world heat intensive energy asset in the form of Icelandic geothermal energy. Now, if we're successful in doing this, this will be the world's first demonstration facility charting the pathway to low cost synthetic fuel production. And so that's really our core contribution to the industry is these production pathways have already been demonstrated to show 70% reduction in cost relative to the next cheapest technology. Great to have that prototype completed and demonstrated in a lab environment. Now it's incumbent on Syntholene to go show that it works in the real world, and we aspire to have that demonstration facility complete by the end of 2026.
That's incredible. So you have a large market space, you have a low cost production facility in the works. So how does low cost production often translate into margin durability? Do you see the long term margins in the industry scale and more as more competitors enter the market?
Well, we've got a lot of incumbent competitors that have very high factory gate production costs. We have a margin advantage. It is in fact durable. It's IP, excuse me, it's IP protected. So we own patents both in the integration of our system components and then actually in the thermal coupling of using heat from geothermal into these high efficiency processes. And as such, we have an IP portfolio that protects our ability to maintain the margins associated with this specific type of a system. So as demand continues to scale, as we see undersupply continue to persist, that is likely to create continuing upward pressure on prices where our competitors all have a far higher cost base and thereby a lower margin capability. My Economics 101 says we want to make the highest quality fuel at the lowest possible price. And if we can be successful in doing that, we'll at least capture outsized margins until such a time as we see sufficient supply to meet these demands. And then as those prices start to come down, we'll have an insulated ability to protect our margins that will be advantageous over peers that in many cases have multiples higher production costs per liter of fuel.
I'm also curious, like as the e-fuel demand accelerates, the capital intensity will become a major concern for investors. Like, how does Syntholene's production methodology, impact capital requirements as you scale towards commercial volumes?
In the proliferation of more e-fuels, we're going to see many hundreds of billions deployed on infrastructure. This could be trillions over the course of the next few decades, and there's no way around the fact that we do need to build the production infrastructure. This is metal in the ground, this is complex supply chains, systems, components, but we're benefited by the fact that A, there are quite a lot of industrial investors with resources on the sidelines. Everybody from oil and gas super majors all the way through to industrial clean energy investors. They want to see these systems deployed. They know there's margin opportunity once they get them on the playing field. They've been hamstrung by these really high factory gate unit economics. And so I think a company that delivers a breakthrough there will have an outside capability to capture those kinds of industrial investors to participate, whether it be in investments in project-specific infrastructure, investments in the company itself, and then lending against the kind of project finance type of work that's needed to be done to build out these kinds of facilities. There's also a lot of government resources. In the European Union, we've got Horizon Fund, we've got Innovation Fund, and they have specifically earmarked resources to see the proliferation of ESAF, electrolytic sustainable aviation fuel alone, let alone e-diesel for marine shipping, e-gasoline. All of these politically advantageous investments have specific resources earmarked for them. So we've got to get it right at the demonstration facility capacity. But once we've demonstrated those breakthrough unit economics, there are many, many funding sources waiting in the wings to pile into the ability to deliver first commercial infrastructure and scaled industrial infrastructure over the next 5 years.
There's going to be a really exciting 5 years ahead. So, as investors look over the next, 3 to 5 years, for example, what milestones should they be watching that best demonstrate Syntholene's ability to capture a meaningful share of this rapidly growing market?
I think it is absolutely essential that Syntholene validate ourselves commercially with customers. We need to be able to demonstrate customer appetite for long-term supply agreements of this fuel over time. It won't be a ton of customers, but certainly a handful of them, simply because we can't be everything to everybody, and there isn't enough fuel production imaginable to meet even the needs of some of the medium-sized and larger airline groups. So I think that's a critical validation. I think ongoing third-party techno-economic validation of what's been demonstrated at Idaho National Lab and what we seek to demonstrate at our demonstration facility. We want third parties continuing to validate that that is the right thing to do and the right pathway to achieve these breakthrough cost efficiencies. But ultimately, the completion of that demonstration facility, showing physically and practically our ability to deliver these fuels in a way that's 70% lower cost than the current incumbents today and feasibly at industrial scale cost competitive with fossil fuels, this is a civilizational level breakthrough. That is an essential component of our story, and being able to deploy it, show it practically, show investors that it works, that I believe unlocks our ability to pursue as much scale as is needed to be able to supply these currently substantially constrained markets.
Thank you so much for your time, Dan. I think I've taken up enough of it today, and it sounds like so much exciting things are happening with the company over the next short term and long term. It's a rapidly growing new sector that I think a lot of investors are probably only just starting to discover now through Syntholene. And so, yeah, I'm just excited to continue to follow your story, especially over 2026 and going forward. So thank you again so much for your time today.
Thanks so much, Rebecca. It's always such a pleasure.
Dan, thanks again for joining us today and for sharing your perspective on the e-fuels market and Syntholene Energy's strategy moving forward. To recap, Syntholene Energy trades on the TSX Venture under the symbol ESAF and on the Frankfurt Exchange under the symbol 3DD0. As always, the MidDay Bell and its host do not provide investment advice, and all views shared today were for informational purposes only. If you found this conversation valuable, be sure to subscribe and feel free to share it with your colleagues following the energy transition or sustainable aviation sector. Thanks for watching, and we'll see you next time on the MidDay Bell.